Hello and welcome to Global Life Trade Signals Engine. My name is EMMA-EKONG, Head Coach, Global Life Trade Signals Engine. Today I want to talk about the Forex market forecast for the year 2020. Using this opportunity to wish you a Merry Christmas 2019 and a prosperous 2020. It is a year of great things as we in the Forex market, in the currency market, we can foresee a great price move that will change the scope of our lives. So today I have 15 currency pairs on my radar that I want to share with my friends and my mentees, my students all around the world. So we have the Euro Canadian dollars, the Australian dollars versus New Zealand dollars, the Aussie pair, the Australian dollars versus Japanese yen, the Australian dollars Swiss francs, the Euro US dollars, Euro Japanese yen, the Great British Pound, Japanese yen, Canadian dollars, Japanese yen, Great British Pounds, US dollars or the cable, Great British Pounds versus the Swiss francs, the Australian dollars, Canadian dollars, the Euro, Swiss francs, New Zealand dollar, and Japanese yen, the US dollars, and the Canadian dollars. So let's move directly to the trading platform to see what the market has for us. Remember, you can visit our blog gltsng.blogspot.com for we have a lot of freebies there for our traders all around the world. A lot of free and powerful indicators like the 3-level ZZ semaphore indicator, very powerful. So today we are going to start with the Euro versus Canadian dollar in the monthly time frame, as we are going to go into top-down analysis on what to look out for in 2020. To those of us that has the advantage of knowing the Elliott wave analysis or the Elliott wave patterns, we should look out for this. As you can see, before I begin, I always say that if you are beginning in trading, you have to know that the hypothetical assumptions that guides technical analysis, which we have three. The first says that price moves, numbers don't lie. Secondly, prices moves in trends. And thirdly, history repeats itself. That is, price have a lasting memory. So if we must begin trading, we must know support and resistance zones in the market. And we always begin our analysis from the weekly time frame, because they give us a bigger picture of what the bigger time frame will be, and we can move down to the daily time frame and to the 4 hours. I don't trade below the 4 hours because I believe that the 4 hours downward, the 1 hour downward is market noises. So I believe in trading from the weekly time frame and also from the monthly time frame. But mostly you should watch out, because the monthly time frame is it's also a bigger picture, but you have to come down to the weekly time frame to see what the market is truly doing. Like in this currency pair, as we know that this is the monthly time frame. Let's see what the market is doing. You can see the market is a downtrend here. Then we have a short-term uptrend in the form of a channel. a run, a pullback, a run, a pullback, a run, a pullback. And in technical analysis, once we have higher highs and higher lows, we classify it as uptrend. So if you see this type of movement, why we have an edge over the market is that we respect market structures, because the market does. The market has a vivid memory of these structure levels, or we call it support levels. So the market rallies, corrects itself, rallies, a pullback, rallies, a pullback. At this confluent point in this monthly time frame, where you see the monthly support trend line and the monthly horizontal support level, they are confluenting here. This is a strong confluence point to watch out for the market. So what do? We go to the lower time frame to see what the market is doing using price action. As you can see down here, the market is an uptrend, even though it's in a channel, an uptrend channel. So we're respecting this higher lows, higher lows, higher lows. So what do we foresee here, and what can we say 2020 will be in this pair? Well, since we have a bigger term downtrend here, as shown in this monthly chart, so we can expect that a break of this trend line and a retest could be going down to the 161 Fibonacci levels, which is also a very strong support levels here at 1.2423. Alright, let's see where to enter this trade using the daily time frame, as the daily leads to the weekly and the weekly leads to the monthly. So the weekly says this is a flag, as we have a short-term downtrend here through the run, the pullback, the run, the pullback, the run, the pullback. You can see price rejection. Market is rejecting higher prices, and we see this bullish candle breaks this trend line. Let's go to the daily to see a bigger picture. You can see this is a downtrend making a run, a pullback, a run, lower highs, lower lows. That's a downtrend. So inside this downtrend, you see the market channeling, making an ascending channel through the run, the pullback, run, the pullback, run. Then you see the market breaks, makes a lower high here. Okay, makes a lower high here. First, you can call it a double top. Then also makes another lower high here, triple top. Then there is a rejection of higher prices. Then the market goes down and breaks this trend line. So what do we expect? We are anticipating that this price is going to go down to this support levels. You can see we have a triple top here, a triple bottom, sorry. So the price is most likely to test this price zone precisely at this 127 Fibonacci extension levels. So watch out for price and target at these zones, as the bigger uptrend trend line is lying just beneath it, as you can see in this weekly time frame. This is how we make top-down analysis before we make an entry. So if this market breaks this downtrend trend line, you are most likely to take this price up. As you can see, take this price up. So first, we wait for price action to give us a signal Presently, the signal is bearish as price has broken this support trend line. You can see touch 1, touch 2, touch 2, 3, touch 4, touch 5, 6, 7, and a retest of it. So we are expecting price to go a little bit lower before it can take off. But if it comes down here and break this support level, we should expect a bearish sentiment. That is a bearish market. So in 2020, watch out for this currency pair as price action unfolds itself. We go to the Australian dollar versus New Zealand dollar. From the monthly time frame, we can see that the market is, the bigger picture is a downtrend. As you can see, a run, a pullback, a run, a pullback, a run. The break of this trend line, the market retested it and formed a symmetrical triangle. As you can see, the break of this symmetrical triangle, the market makes a lower low, then come back for a retest. You can see it has finished the retest. Let's see what is happening on the weekly time frame to have a clearer picture. You can see a run, a pullback. Okay, well, let's start here. A run, a pullback. Let's see the daily time frame. You see a clearer picture of it. So you can see that the market is consolidating at this point. You can see a break of this trend line. So the market is consolidating at this support level. So at the break, if the market cannot break this support level, we are sure to take price to this resistance level. So in 2020, watch out for the bearish market in this pair. We foresee that this market is bearish for 2020 as the price action. You can see a whole lot of bearish candle here, but there's don't forget there can be, you can see a double bottom here. The market can retrace down to this level and continue. So watch out for a bearish market in the Australian New Zealand pair in 2020. So what about the Aussie pair, the Australian versus US dollar? Let's start from the monthly time frame. You can see that the market is in a downtrend in this pair. Forget about those mini trend line analysis. As you can see, a run, a pullback, a run, a pullback, a run, a pullback, a run. A clear downtrend. So what are you looking for? You can't enter at this point unless price action shows. You can see inside this downtrend, the market made an uptrend by making a run, a pullback, a run. So we are waiting for a break of this trend line to take the market short. And a possible, let's see a clearer picture. You can see this is a real uptrend by a run, a pullback, a run. So the market makes a lower high here and breaks this trend line. Then we are waiting for a break of this higher low to a lower low to enter this market and ride the trend down, 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 down to the support level. Alright. Let's make analysis of the Australian dollars versus Japanese yen. So we can see that this currency pair is a clear header and shoulder pattern. So the left shoulder, the head, the right shoulder. So what we wait for is this price action, current price action at this level to see what is happening. So we go to the weekly time frame. You can see the weekly time frame, a run, a pullback, a run, a pullback, a short-term uptrend in an overall downtrend in a bearish market. So we wait for when the bulls have lost their momentum through the break of this trend line and a lower low to take this market down. So what are we looking for in 2020? Look out for this Australian versus Japanese yen in the bearish market, as you will wait for price action for a trend line break and a lower low to go short. So let's make analysis of the euro versus US dollars in the monthly time frame. You can see this is a downtrend market. So we wait for price action. Let's zoom out and see price action at this level. We'll go to the daily. You can see yeah, the daily is giving us something. You can see a double bottom here, then price retains this resistance level. You can see rejection here, rejection here, rejection, rejection. It's a strong level. You can see price rejections. You can't go beyond it. It's a rejection of higher prices. The market breaks the trend line. What we are waiting for, okay, it makes, let's see, the 4 hours. You can see a clearer picture in the 4 hours here through a run, a pullback, a run, a pullback. Market makes a lower highs, then breaks the lower lows here, or the higher lows here, and give us a lower low, which is an entry. This is a great sell signal price action, as it reflects in it means that the bullish momentum, which have a run, a pullback, a run in this market, has expired. So the bears are ready to take price down. So most likely, if you are trading this pair, you will know that this is a point of high confluence. You take your stops to this level, then you trade down to these support levels. You can say your take profit 1 and take profit 2. Then in the bigger time frame, you look out for 1.042 take profit levels. Alright, thank you for watching this video. Go to our blog gltsng.blogspot.com for more freebies and more analysis and more videos. And don't forget to subscribe to this channel if you like watching videos from us. Thank you, and God bless you as we bring out more videos on market analysis for 2020 and markets to look out for. Thank you, and God bless you.